Welcome to Financial Issues with Shanna Burt, where we join reality with truth, helping you to make the most of your money by honoring God with your investments. Now, here's your host, Shanna Burt.
Good Wednesday morning. It is May 15th, 2024, and we're so glad that you decided to start your morning with Financial Issues. We're a stewardship ministry, and we help you be a good steward with everything that the Lord has given you with our biblically responsible investment strategy. We call that defunding darkness, and our encouragement, our call to fund the light, to be a joyful and generous giver. Let's start the show off with the stewardship verse of the day from Psalm 111:10. The fear of the Lord is the beginning of wisdom. All who practice it have a good understanding. His praise endures forever. Stay tuned. We'll dig a little bit deeper into that later in the show, but let's turn our attention to some economic news. So yesterday, PPI was reported. PPI is what we call wholesale inflation. It refers to the increase or decrease in cost that producers experience as they are producing the good or service that they produce and sell to consumers. And so a lot of times that cost is passed along, because if they don't pass that along to consumers, then their profit margins shrink, and then their companies don't experience economic success, and their share price goes down as well. And that could be a vicious cycle to the downside. So the producer price index was reported yesterday. At first look, it seemed to come in much hotter than expected. Both the headline and the core number came in with an increase of 0.5%. The expectation was that the headline number would come in 0.3 higher, and the core number would come in 0.2 higher. They both came in at 0.5 point higher, and the markets reacted negatively in the beginning, but then they chilled out just a little bit as they readjusted, as they digested the revision to the prior month. So the headline print of 0.5% increase month over month for the headline follows a 0.1 drop in March. So that number was revised down. The producer price index for March was actually a negative instead of a positive. So the same was seen with the core. The 0.5% increase in core over a 0.2% increase in the previous month would have been way worse if on top of the 0.5% increase of this month. So all in all, we ended up with producer inflation or wholesale inflation a little bit more muted than what was originally thought. CPI comes out today. We'll get to that later in the week. That is going to be a big number, potentially moving the markets, and depends on how it comes in and how the Fed interprets how it comes in, how they telegraph that. So the NFIB small business optimism number was reported yesterday as well. That index, the small business index, rose to 89.7 in April, following March's 12-year low of 88.5. It beat the forecast of 88.1. Now, inflation remained the top concern for 22% of the owners surveyed. The number of small business owners planning price hikes fell by 7 points to a net 26%. Also, 12% of owners said that they plan to create new jobs in the next 3 months. That was up 2 points from March. Well, that's great news, since small businesses are going to contribute to job creation rather than just letting the government do it, which is not a good thing, because the government does not do it efficiently.
No.
40% reported that unfilled job openings 40% reported unfilled job openings in April, up 3%, 3 points from the previous month. And the chief economist for the NFIB said that cost pressures remain the top issue for small business owners, including historically high levels of owners raising compensation to keep and attract employees. So that goes along with the $20 an hour minimum wage that we've seen in California. I'm sure that plays a little bit into that number as well.
Yeah, that's a little bit concerning there, Shanna, especially considering, these. I remember Dan used to talk about this all the time with raising minimum wage. People think like, oh, it's going to be a quick fix. People will get out of poverty. Well, you have to understand that there are business owners who are paying these people, and if they are required to pay them more, then that's going to be less money to go around everywhere else. They have to raise their prices. They might have to lay off other employees. It's not as simple as some people might think it is, and it's disappointing to think of that. Yeah,
it is. That's a mentality that the government, or at least the Biden administration, tries to ram down our throats, is that, all of these rich people should pay their fair share, and they don't even consider that it's the quote-unquote rich people that are really creating jobs that stick.
Yeah, absolutely. Shanna, you had mentioned inflation just a moment ago. There was a headline I wanted to get your eyes on here. Fed Reserve Vice Chair Philip Jefferson said on Monday that a slowed progress on inflation in Q1 is a source of concern, but added that the healthy labor market allows central bank to maintain downward pressure on demand until price pressures cool. He said that with the economy in a solid position in terms of job growth, the Fed can now focus even more so on inflation and keep rates higher for longer. He added, we continue to look for evidence that inflation is going to return to that 2% target. Until we have that, he said, I think it's appropriate to keep the policy rate in restrictive territory. He didn't say anything about it being a pipe dream, Shanna, but we know that that's true, obviously, even though the Fed doesn't admit it. Shanna, what, if anything, do these Fed announcements have to do with our strategy? And can we still take a business as usual approach when the Fed says anything, or could this or should this impact our methods in any way?
Yeah, that's a lot. I hope I get all that. So the markets are efficient, and the markets will adjust to what happens. Interest rate decisions impact debt-heavy companies the most. So companies that have a lot of debt on their books, and the government is one of them. So we've seen interest that we pay on our national debt increase a bunch just in the last year. So the debt is a consideration that we factor in when we're doing stock analysis on different companies. So the Fed can look all they want, but it's going to be tough, if not impossible, for inflation to make much more positive progress until Congress gets a hold of spending. That will not happen under the current administration. That's the Biden administration. Really tends to try to buy votes, forgiving student debt, entitlements, all of the things that they are giving money to. They feel like they have a Keynesian approach to economics, believing that the government's responsible for creating jobs, when it's really the job of the government just to create a fair and unintrusive business environment that attracts businesses, successful businesses, because businesses are far more efficient at deploying capital than the government is. And, we even with the Trump administration, we may not see an administration that really gets a good hold on spending. I remember that when Trump first took office, he reduced spending. He made all of the departments do, I think, a 5% budget cut. But that's not necessarily... He's got a big job ahead of him if he comes into office, and with the way that government is just out of control spending. Yeah, and even spending it on good things too, Shanna. I mean, he has a border to clean up. He has illegal immigrants to potentially send back to their home countries, and he has a military to restock too, because the military has been depleted. That all costs money. It does. That doesn't come. It does. And so much of the spending that the government is doing is not discretionary spending. It's spending that they're obligated to do because of laws that they passed and certain social programs that we have in place. Well, we got to take a break, but don't go anywhere. We're going to come back with more financial issues right after this. You can find out more about our biblically responsible investment strategy at financialissues.org. And if you're a partner, make sure that you've got the information for the partner conference call today.
The miracle of carrying a child creates a unique bond between a mother and her unborn baby. She feels the baby's movements and responds to their needs even before birth. Help create that bond between an abortion-minded mother and her unborn child by giving the gift of life through Preborn. During the month of May, you can bless your mom for Mother's Day by giving to Preborn on your mother's behalf. For $28, you can sponsor an ultrasound scan that will enable an abortion-minded woman to hear the heartbeat of her baby. 90% of the time, that sound will change a woman's mind and cause her to keep their baby. Give the gift of life to the woman that gave you life by sponsoring an ultrasound. Go to preborn.com/FISM to give. That's preborn.com/FISM. You can help an abortion-minded mother receive discipleship, encouragement, and the strength needed to have her baby.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Thanks for joining us on Financial Issues today, folks. We were just talking, Shanna and I were in that last segment about what the Fed's doing and how, sometimes when the Fed will say things, the markets will go one way or the other. We've seen that happen often. Sometimes they go up. Sometimes, Shanna, they do, in fact, go down. And so that kind of brought up, a question that I was thinking of here. Imagine for a moment that we have a stock that's on the buy list and an investor's been watching it, notices it's begun to increase. He waits 2 weeks. The stock continues to go up and it excites him. And so he wants to put new money to work in this stock. What is some advice that you would give him in this situation, Shanna? Is it wise for him to step into it, assuming the upward trend? What do you think?
Gosh, it really just depends on the individual company. But what I would say is, you can get really caught up in your emotions as an investor. You can be, if you're in this case led by greed, you start to have FOMO, the fear of missing out, that if you don't get in, you're going to miss it. Same thing on the other side. You can have fear of loss, that you get in and you see things going down, or you even may have FOMO or a little bit of fear on that side is that, well, what if I wait? Maybe it's going to go lower. You can really get caught up in those motions and you can just really get paralyzed. But what we advocate here is a very systematic approach. Just, focus on a timetable, not trying to time the market. Just get in, in a systematic way, just like you would do if you're contributing to a 401k plan. You have money that comes out on a regular basis and it goes in. You can't really say, oh, wait, the market's down, take more money out of my paycheck this week, or, oh, the market's going up, don't take as much out, because that's really the opposite of what investors tend to do anyway when they're being led emotionally.
Yeah, it's a really good reminder not to be led emotionally there, Shanna. How would this situation perhaps be unwise for someone to deal with? Say if this investor waits for the stock to decrease, thinking that it would decrease, and he says, okay, once it goes down a little bit, then I'll start putting new money to work. Is that a good strategy, or is that maybe something to avoid?
You know what? It's very common. I see it happen a lot. I've worked with individual investors for over 20 years now. And it seems like when the market's down, everybody knows it makes good sense to buy low and sell high. That's the old adage, right? Not necessarily our strategy, but that's the way that you make money in the markets. And so it just baffles me a lot of times to see, okay, the market's down. That represents good buying opportunity. People always know that with hindsight, looking back on it, they say, oh man, I wish I really would have got in, when the price was this much or when the market was at this level. And then they wait. They see the market start to go up and they think, oh, well, it's going to go back down. I'll wait to get in. So, you could be waiting a long time. Once a bull market starts, there are periodic pullbacks, but it's really a bad idea to try to time the market. And, if you're waiting and you see the market go down, it may be what you've been waiting for. But then sometimes people get scared and they think, oh, well, it's not going down like I thought it would. Maybe it's going down more. Well, maybe there's something else wrong, or maybe it's going to go down more, and you just get into these vicious cycles where you just end up with paralysis by analysis.
That's good. Yeah, it's all about keeping that long-term approach and keeping steady, holding steady, and following the strategy too. I think that's really good stuff, Shanna.
Yeah, I was listening to an interview. I won't say who it is because I don't want to promote the person or anything, but I was listening to an interview, and it was a very well-known investor, and he had a very, very good long-term track record. Out of 30 years with a particular fund, he had 0 down years and averaged 30%. But he was talking about a specific trade that he made one time, and he said, I didn't get in at the bottom, but I still made a lot of money. So, that just goes to show you, even some of the smartest Wall Street moguls that we might, look up to are not right. I remember Dan saying, when he talked about selling silver, remember he said when silver went up so much, he didn't sell it at the top, but he got a really good price for it. So
Yeah, it's well said, Shannon. It's good stuff. It kind of brings to mind, too, just some further ideas here from what we were talking about a little bit yesterday, and also what you had just mentioned in the last second about some of these economic indicators. Sort of a teachable moment for today. I'd love to get your thoughts on is how the economy affects my portfolio. So let me share a story with you quickly. First time that I ever came onto the air with Dan, so the first time that he ever let me talk on the air so that people on the radio could hear, was he would have me give an update on which economic indicators would be reported for that week or for that day. And I'll be honest with you, Shanna, back then, I had very little idea of what I was actually talking about. I had very little idea of what I was telling him. I would say which indicator it was. I would say the previous week's reading, give him the number. And I understood almost nothing about why it was important. And my guess is there are a lot of listeners out there who have similar understanding when we talk about things like GDP and we talk about PCE, home builder confidence, factory orders, consumer confidence. We mentioned, again, some of these yesterday and some today as well. It might sound like gibberish to some people. So, Shanna, I'd love to talk about this today, especially considering that today, as you mentioned, we have an important one coming up. What impact do these economic numbers and the economy as a whole have on my portfolio? And maybe just kind of to start, what are some numbers that we should think of as some that are most important that might be a good idea to keep an eye on?
Well, I think the driving factor as of late has been inflation. Yeah. For so many years, we experienced almost zero, or not zero, but very little inflation, under 2%. And then we had COVID, and we had the government spending a ton of money, injecting a ton of money into the economy. We had supply chain issues. We experienced really high inflation. It peaked out at 9% in the summer of 22. So that is the driving factor that we're dealing with right now. And the Fed really has a couple of tools that they use to try. They have a dual mandate. Number one is price stability. So they're charged with keeping inflation in check by manipulating interest rates and money supply. And the second is full employment. So they need to execute this price stability without harming the labor markets and without causing unemployment to go too high. That's kind of their dual mandate. So, that's what we look at. Inflation is a big one, is an important one, because it impacts consumers directly. We have a consumer-driven economy. About 70% of our economy is driven by you and I having jobs, spending money, and continuing to operate, healthy budgets and being able to spend money. So, when consumers don't spend, companies make less money. When they make less money, they tend to cut jobs. Their profits tend to drop, and that causes their share price to drop, and that causes the market to drop. So, inflation really since January of 2021 through March of 2024, overall inflation has increased right at 19%.
Ouch.
That means, that it costs us 19% more just to do the things that we do on a daily basis than it did in 2021. During that same time period, the price of food jumped 21%, shelter increased almost the same 21%, and energy cost rose 37%.
Good grief.
So, it tells us there was a report out recently suggests that the problem is going to worsen if wage growth lags behind. So, I guess prices can go up as long as consumers' paychecks are going up and that they can keep up. If not, they end up eating into their savings. Once that's depleted, then they start to run up credit cards and act like the government's spending money that they don't have. So that's one of them. Inflation data, labor data is the other one, and that influences what the Fed does with interest rates. So if we continue to have these strong labor reports, which we have seen them weakening lately, then that makes it harder for the Fed to justify cutting rates. And then another one is going to be growth of the economy. So that's measured in GDP. We want to see the economy growing because that means that people are working. It means that, that tax revenue is going to increase. Now, unfortunately, the government just, if they see an increase in tax revenue, they spend it before they even get it. But, those are just a few of the factors.
It's helpful there, Shanna. And this is maybe a good question for someone like us, asking someone like you who's been doing this a long time. How often should we check the news cycle for these economic indicators? Should we check it even at all, or is it better to just let you tell us, on the air, bringing certain numbers up and stuff? Is that something that's good for us to check?
I mean, if you understand what you're looking at, you can read, you can find opinions out there all across the spectrum. So anytime a number comes out, you can hear people saying it's good. You can hear people saying it's bad. So what I really suggest, unless you have a real interest in economics and a good background to look at it, is that whenever we report numbers, we try to give you some explanation about what that means. And, we really do that for you. We look at the macro data that comes out. We follow the companies that we invest in and that we encourage our partners to invest in. And that's really reflected in the asset allocation models and what ends up on the buy list.
Good stuff there, Shannon. I think we got time to get to at least one question here before our break. Brian is asking, relating to the recent sell alert for TE35, my question is not so much about the stock being BRI. I'm convicted in selling stocks and not BRI. What I'm struggling to come to terms with is the stock screens non-BRI with Inspire, but it screens clean with Evaluator. Now, Timothy Plan uses Evaluator. Is it logical to say Timothy Plan is not BRI? What are your thoughts, Shannon?
No, I would definitely not say that's the case. The Timothy Plan has the highest conviction for biblically responsible investing. The Timothy Plan was the pioneer of biblically responsible investing and coming up with these screens. So, you've got some different screeners out there, and they use some different criteria. Some information lags a little bit, but I would say that with the ETFs, especially with the Timothy Plan, by the nature of the way that they were created, they're only able to be rebalanced twice a year. So if there is something in there that comes up as dirty, it will be removed. I know the Timothy Plan, I know their conviction for BRI, and I would not question that in the least, that Timothy Plan is certainly biblically responsible.
Good stuff there. Hey, folks, if you want to learn more about what being biblically responsible means, you got to become a partner and join our conference call that we have later today, noon Central Time, 1 p.m. Am I getting those times right, Shannon? Noon Central,
you are.
1 Eastern Time.
Got
Awesome.
it.
Good stuff.
Got an email? If you didn't get the email, check the website. The information is there. Shortly after we're finished with the conference call, it will be posted for a short time. So if you can't join us right at that time, you'll be able to catch it later. Well, don't go anywhere. We're going to take a short break, and we'll be back with more financial issues.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
You know, folks, the bond between a mother and her child during pregnancy and childbirth lays the foundation for a lifelong connection characterized by love, nurturing, and mutual support. And we're asking you to help us create that bond between an abortion-minded mother and her child by giving life through Preborn, giving that gift of life. During the month of May, help us place 100 ultrasound machines that will save babies over and over and over again. Go to preborn.com/FISM to give. That's preborn.com/FISM.
I'm John.
I'm Debbie, and we're Samaritan members.
We have 8 children, ages from 30 down to 15, and we have a ministry called Family Man Ministries.
When he left the pastorate to start the ministry, we had no income for about a year potentially, and so we were living on almost nothing. The cost of health care seemed impossible because we had a big family. And so when I started researching ministries, there was no comparison. It was just the best deal. And so a year after we joined, my 10-year-old daughter at the time got pneumonia, and it was scary. Someone sent a card just to Maggie, and it said, not just that we're praying for you, but that God will always take care of you, and here's $5 for you to go out and get ice cream. It was just really special.
To make that connection, that's an amazing thing. I was sold on Samaritan Ministries. I just thought, okay, I'm a part of this.
Throughout the month of May, FISM is partnering with Preborn to fund the light by providing 100 ultrasound machines to pro-life centers around the country. Now, how can you contribute? Well, for as little as $28, you can provide an ultrasound scan to an abortion-minded woman in crisis. And when that woman hears the heartbeat of her baby, she will choose life, get this, 90% of the time. It's remarkable. And guess what? With the help of a donor match, for every 200 scans donated, that's for a net value of $5,600, Preborn Ministries will be gifted an ultrasound machine to place at a clinic in need. Each machine has the potential to impact hundreds of thousands of mothers' choices. Preborn also offers additional support to mothers in need and presents the gospel to every mother who comes into their clinics, knowing that salvation is the greatest gift that can be given to a mother and her child. So go to preborn.com/FISM to give. That's preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shanna are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues, folks. Thanks for joining us today, being here with us. We're going to continue the conversation here. We got a lot to get to in the rest of the show. I got a couple clips of Dan that I'd like to play. We'll get to those probably in the next segment here. We got a great question that just came in from Ben, which we'll get to in a moment. But before we do that, let's take a look at the markets. So yesterday, the inflation data that came out left the benchmark indices relatively unchanged, as did, surprisingly, Fed Chair Powell's comments on inflation. Perhaps it was because everybody expected him to say what he did, basically, which was continuing to lead from behind and hoping that inflation comes down, but not really doing anything about it, basically. So by the end of Tuesday's trading hours, the Dow, S&P, and NASDAQ all finished positive, relatively speaking. The Dow was up 1/3%, S&P 1/2. NASDAQ up 3/4, actually hit a new record high. Oil closed around $78 a barrel. The 10-year Treasury yields were below 4.45%, so creeping down just a little bit. The markets just opened a few minutes ago And as of right now, they are all positive as well. The Dow is up 0.5%. S&P, same thing. NASDAQ, looking to build on its record finish, is up 0.6%. That's what Wall Street is looking like here this morning. Okay, folks, so we once again, we have clips that we're going to get to later. We have some news. But before we get to all that, we got a phenomenal question that came in the chat that I think is worth our time answering. Grant, what's that question we got there from Ben?
Yeah, so from Ben, I'm having trouble getting my father-in-law to understand my biblically responsible investing conviction. He claims to be a Christian and says he tries to invest ethically, but he criticizes that BRI is just for marketing and not actually possible because you can't know everything a company is doing. He scoffs at the screening tool, saying I'm just blindly trusting them without doing my own research. He says I'm better off making more money from the Magnificent Seven or a low expense ratio index so that I can give more money away later. It leaves me questioning if I'm being self-righteous or giving that perception by making moral judgments about companies. Do you have any advice or encouragement biblically or financially?
Ben, great question, brother. First place I'll tell you to look is check the chat because we got a lot of great chat comments there. A bunch of people saw that and have been given some great scriptural encouragement there. But let me take this piece by piece here, brother. And let me first say that I really appreciate your heart for biblically responsible investing and your care for your father-in-law as well. And I do hope that perhaps he may listen. If you would like, Ben, you can drop your email into the chat, and I'd be happy to send you this segment that you can send off to him. Maybe it could be something that could be helpful for him. So I'm going to try to answer your question as best I can in a humble way. So your father-in-law claims to be a Christian and says he tries to invest ethically. You and I know, obviously, ethical investing is not the same as biblically responsible investing. Many people do ethical investing where they try to invest in green energy things and they try to save the elephants and they do all that stuff that counts as ethical investing. None of that is involved in biblically responsible investing. Biblically responsible investing is investing based off of the clear and true teaching of Scripture. We believe the Bible means what it says and says what it means, and that it is true for us in our investing as much as it is for how we love our neighbor and how we serve our church and all those other things also. You said he criticizes that BRI is just for marketing, and it's not actually possible because he can't know everything a company is doing. Let me tackle that first one first. It is not just for marketing for sure. My belief, Ben, is that if we wanted to market more, if we wanted to get the word out about what we do, we could very easily stop doing biblically responsible investing and start giving people what their itching ears want to hear. And we'd probably double or triple or quadruple our listener base by doing that. But we're not going to do that because we don't believe that it's right. We're not in this to try to market. We're in this to try to do what's right and try to help you honor God with the money that he has given you. And that's really the key here. Your investing money is not like you're giving the money away. That is your money that you own that is being used to fund abortions, and it's being used to fund the gambling industry and pornography and human trafficking and the LGBTQ agenda. And as a Christian, you know, your father-in-law claims to be a Christian. My hope and prayer for him is that that would grieve his heart as it grieves God's heart as well. It would make him angry and frustrated and upset, righteously angry, of course. He mentions also it's not actually possible because you can't know everything a company is doing. We've talked about this often, folks. There are no perfect companies out there. And so we have to draw the line somewhere. If we said we're only going to invest in perfect companies, you would not invest in any single company because there are none. Companies are run by sinners with sinful agendas. What we want companies to do is to not use our money to fund things that grieve the heart of God. That is where we have drawn the line. That's where we believe the Scripture draws the line. And so I would hope, Ben, that your father-in-law might be able to see that there is a line there, and that is what it is. You know what? He's right. You can't know everything that a company is doing. You can't know everything that the CEO does or that the members of the team do. You don't know if they're committing fraud on the side. You don't know if the CEO is sleeping with his secretary on company time. You don't know any of that stuff. We have drawn the line on our money is not to be used for things that grieve God's heart. That's what biblically responsible investing is. We're not being pharisaical about it. And so I would encourage him in that way, brother. He also said he scoffs at the screening tools, saying you're blindly trusting them without doing your own research. I disagree with that. I think that you're trusting the research that our team does. And we also encourage you to do your own research as well. The screening tools that we use are trustworthy for sure. We also want you to do your own research as well. We've had people reach out to us and say, hey, I saw something that was a little iffy with this stock here, or with this stock here. And so we've looked into that as well. The research of the financial issues family as a whole is another tool that we use to be able to filter these stocks here. So we would encourage you, definitely do your own research, but also saying you can trust the screening tools and you can trust our team as well, Ben. One other thing that he said, just based on your question here, you'd be better off making more money from the Magnificent Seven or at a low expense ratio index. Financially, you might be better off. You might make more money, honestly. I'm going to come right out and say it. I think that there are many lucrative stocks out there who you could make thousands off of those. But your heart would not be in the right place because you are making that money off of the funding of abortions. So the blood of unborn children is what's paying you that money. And transing children after they're out of the womb. And the pornography industry. That's wealth gained by illicit means. Proverbs 13:11 says, wealth gained hastily will dwindle. That word hastily really can be translated as wealth gained illicitly, or wealth gained through fraud, or wealth gained sinfully. The Bible says that is not a good thing to do. So if you're gaining wealth by illicit means, that is displeasing the heart of God. It doesn't matter if you make millions. What's more important is that you please God's heart. And we believe it is better for you to have less materially, but to please God, than it would be for you to have more and to live in disobedience to God. Now, we believe through the strategy that we offer, there's a way for you to do it where you can live pleasing to God and he does bless you financially. That's not the prosperity gospel. I'm not saying that at all. I'm saying that Scripture says that God blesses the obedience of his people. The blessing may come in this life. It may come in the next life. I'm banking more on the blessing in the next life because that's far better. But it might come in this life as well. You're far better off, Ben, investing in companies that do not grieve God's heart eternally. You're far better off doing that. You're storing up for yourself a treasure that never fades. The money made off of Magnificent Seven stocks someday is going to be dust. But pleasing God has eternal rewards and eternal ramifications. He said so you can give more away later. That's a wonderful ideal, but it does not justify making money off of illicit means. You'd be far better to be obedient to God, to trust that what he gives you is what you'll have, and then to use that, what he has given you, to give back to the kingdom and to the church. And so, Ben, to kind of wrap it all up there, man, you're not being self-righteous. You're not making those, moral judgments about companies. You're living in obedience to God by being biblically responsible with your money. You are taking the money that God has given you, and you're being obedient in that. And I want to encourage you in that, man. Keep on going. When you do what is right, you will probably stand alone. And even from professing Christians. But be encouraged, brother. You're doing what is right. Remember Proverbs 13:11. There are other passages as well, too. I hope that can be of encouragement to you, Ben. Drop your email in the chat there, brother, and I'll be happy to send this to you so you can pass along to your father-in-law. We got the Ag Report coming up here, folks, and then more financial issues right after this.
This is Craig Howguide with your Financial Issues Ag update for May 15th. Well, corn traders are living and dying with each new weather forecast. Trade was expecting a rain-delayed planting, but midday we received a 5-day forecast that offered a better window of opportunity in the western and central corn belts, and that pressured prices lower. At the close, July corn was a nickel lower at $4.67.5 per bushel. The Biden administration plans on more tariffs for Chinese imports, but not on used cooking oil. The biofuel industry is hoping for a tariff on fraudulent used cooking oil that's been added to supplies of U.S. biostocks supply and demand. Without that flow restricted, the bean oil supply and demand becomes even more bearish, and yesterday that weighed on bean prices. We had July beans a nickel lower at $12.14.5. For wheat, it was a case of buy the rumor and sell the fact. We saw the Russian market finally respond to the situation in that nation, but their response was muted compared to the risk premium that's been built into the futures market, and as a result, prices headed lower. In U.S., spring wheat plantings are sprinting ahead with 61% of the spring wheat crop now planted versus 48% on average. Yesterday's close had Minneapolis July wheat a nickel lower at $7.3325. Kansas City dropped by 16 3/4 cents to close at $6.83 1/4, and we had Chicago 14.5 cents lower at $6.72 72.5. Cotton futures just flat out took a beating. On the close, July was down 300 points as they settled at 74.63. Livestock futures all surged higher. August live cattle were $2.72.5 higher, $176.12.5 per hundredweight. August feeder cattle rose by $4.32.5, settling at $255.67.5 per hundred. And July lean hog futures were 87.5 cents higher at $100.92.5 per hundredweight. Class 3 milk futures pushed into higher ground but couldn't hold the gains and ended up today closing a bit lower. At the closing bell, the June futures were down 40 points as they settled at 20.86. Well, this has been Craig Howgard with your Financial Issues Egg Update. We'll be right back with more financial issues after this.
The miracle of carrying a child creates a unique bond between a mother and her unborn baby. She feels the baby's movements and responds to their needs even before birth. Help create that bond between an abortion-minded mother and her unborn child by giving the gift of life through Preborn. During the month of May, you can bless your mom for Mother's Day by giving to Preborn on your mother's behalf. For $28, you can sponsor an ultrasound scan that will enable an abortion-minded woman to hear the heartbeat of her baby. 90% of the time, that sound will change a woman's mind and cause her to keep their baby. Give the gift of life to the woman that gave you life by sponsoring an ultrasound. Go to preborn.com/FISM to give. That's preborn.com/FISM. You can help an abortion-minded mother receive discipleship, encouragement, and the strength needed to have her baby.
As of this year, more than 1,000 school districts have adopted gender non-conforming policies that intentionally keep parents in the dark about their kids' gender identities. To make matters worse, the American Bible Society now reports Bible reading is at an all-time low. We can't hide from the issues facing our country anymore. The undeniable truth is we're in a culture war, and we must be engaged. For over the last 25 years, Financial Issues has stood as a leader of biblically responsible investing, encouraging the body of Christ to keep funds out of companies that dishonor God. We call that defunding the darkness. We're at the forefront of the fight, helping you not only with your finances, but advocating for truth and godly wisdom. Run the race with us as we press forward together. For more information, go to financialissues.org. That's financialissues.org. The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Thanks for hanging with us, folks. Ben, terrific question earlier, man, and I hope that made sense, my answer there. If you need to re-listen to it again, you can always get the podcast on the FISM app. You can get it for free and listen back as often as you would like there. But yeah, man, I hope that was helpful for you, and I appreciate that question a lot, because it really was a very good one, and I can tell that your heart is in the right place for wanting to be biblically responsible and wanting to share that message too. And I'll just reiterate what I said at the end before the ag there. When you do what's right, man, you will stand alone. You really will. And so that's part of the cost of following Christ is being able to say, you know what, I might lose some friends because of this. Not because I'm being a jerk, but because I'm being faithful to the truth. If you do that, you may stand alone, but the cost is worth it because you're being found faithful to God, and we believe that. So good on you, Ben. Keep on fighting, man. That's really good stuff. All right, folks, we promised that we'd get some Dan clips here. We have some headlines that came out here, but before we do all that, a few Dan clips here to get us going. This first one here, and by the way, these are some great rants here. I hope you enjoy these. The first one is the constitutionality of the Federal Reserve. It's a good question, asking the question, is the Federal Reserve actually constitutional? Here's our founder, Dan Celia.
There's nothing, that would be would be unconstitutional about the Federal Reserve. The Congress of the United States of America ultimately has responsibility, along with the Treasury Department, as far as the responsibility for our system, our monetary system. And they have the responsibility for that. And that would be, what I mean by that is the monitoring, the accountability of, and the administration of our monetary system, our physical dollars. So the Federal Reserve, every bank in the country has to go to the Federal Reserve to get money to lend to people that need car loans and mortgages and other things. And they get that at the Federal Reserve. And the Federal Reserve charges those banks an interest rate. That's the prime rate that we hear so much about. Charges that interest rate to the banks. The banks then charge more interest to make up for their administrative expenses to the American people. So obviously in 1913, the Congress came to the understanding that they were not capable of doing that and keeping track of that, and it would be in the best interest of the American people to take care of the monetary system and to take charge of that, as long as they were fully accountable to the Congress of the United States. And that's where I have the biggest problem, because I think the Congress of the United States does an absolute horrible job in holding the Federal Reserve accountable. When you have a Federal Reserve that is saying to the Congress of the United States of America, oh, no, we're not going to give you that in our audit, which they say all the time. As a matter of fact, for years they said, oh, no, we're not being audited. You're not going to audit us. Is beyond my imagination. I don't understand that. There would not be any Federal Reserve if it wasn't for the Congress of the United States of America. So, yeah, they're constitutional.
So we move now to it's a sort of a similar topic, but this is an especially good rant I think you'll enjoy. The credibility of the Federal Reserve. I'm speaking wrong here. The credibility of the Federal Reserve. Is it credible? I think you probably expect what Dan's answer will be. Here's our founder, Dan Celia, talking about the credibility of the Federal Reserve.
The Federal Reserve has never had any real credibility. It's always been perceived credibility. They've never given any reason, in my opinion, not all of them, not all the presidents, but the Federal Reserve in general. When was the last time they were right? Can somebody tell me? I mean, have they been right about anything? Crisis after crisis after crisis. It's horrifying when we look at this. And, you know, I think there's a critical time at hand here for the next 18 months. There has to be dramatic change at the Federal Reserve. I would like to say we'll have to wait and see. I don't think we have to wait and see. I'm making you a promise that that's what's going to happen. There's going to be radical changes. So things are only going to get worse with the Federal Reserve. They're not going to get any better. And it needs to be changed, but there can't be change until there's a new administration. And there can't be change unless the new administration believes in America, believes in America values, believes in America's strength, believes in the American worker, believes in the American people, believes in the economy that we could have, believes in future generations of America for innovation and innovators and ingenuity that can come only from America, it seems, that believes in free market economies and the free market in general. See, that's what it's going to take, all of those things in combination. That's what the next administration has to be in order for America to be saved.
That's what it's going to take, folks, really. And I think at least, to a degree, I think the Federal Reserve is starting to see this election is going to be very important for the Fed elite's future as well, for their job security. So we had a headline that came across my eyes in the last couple of days. Powell expects inflation to fall, though not as confident as before. It's not much different than what we've heard. Powell said Tuesday he expects U.S. inflation to continue to decline through 2024, added that his confidence has lessened somewhat after prices rose more quickly than expected through the first quarter. He said, quote, I expect inflation will move back down on a monthly basis to levels that were more like the lower readings that we were having last year. I would say my confidence in that is not as high as it was. Powell then said he does not think that the Fed will need to raise interest rates again, but said it is more likely that the central bank will hold the policy rate where it is. He's saying everything that we already know, folks, basically. And he added, we did not expect this to be a smooth road. Clearly, it has not become a smooth road. But again, that's not quite the same thing that he told us at the beginning of the year when there was hope that there'd be possibly 3 rate cuts in 2024. Now people are wondering if there's going to be any rate cuts in 2024. As you've heard Shanna say, and I as well, I think there will be at least one before the 2024 election, because that has a lot to do with the Federal Reserve, of course. We got one more comment here from Ben that was really, really good. Just as a follow-up, thank you for the encouragement. Ben says, I think it's a fallacy of all or nothing I've struggled with. We're never going to be sinless, but trying to have sin in our life is better than throwing your hands up and continuing to knowingly sin, because you'll never be sinless. In politics, no candidate's going to perfectly align with your values, but you can still vote for someone who aligns with more of your values than the other candidates. Just because you can't 100% guarantee your money isn't going to anti-biblical companies, that doesn't mean you shouldn't try your best to avoid them. Ben, you are exactly right, man, and I appreciate that so very much. None of us can be perfect. None of us can be. What we're trying to do is be obedient. And, it brings to mind this example of, I can't control what someone else does with my money once I part with it. Now, that's different from being a steward, obviously. It's different from investing. But when I part with that money, say I give my money to someone, and then they take that money and they do with it what they wish, I can't control that. And you know what? I'm of the mindset that what's more important than trying to control what someone else does with the money that I give them is being obedient to God. Being obedient to God is the most important thing. That's what I can control. I can be obedient to him and let God be God and God do what he wishes with that money. The reason why biblically responsible investing is so important is because it's still your money. It's still in your control when you are investing in companies that you know are doing things that are openly sinful and rebellious to the heart of God. So good stuff there, Ben. I appreciate that so much. Hey, as we close our show, folks, I want to remind you, conference call today, noon Central Time, 1 p.m. Eastern Time. Make sure you join us, please. I believe there was an alert sent out yesterday, and it should be up on the alerts page as well. That has the phone number to call in. It has the access code. Make sure that you join us for that conference call, 1 p.m. Eastern Time today, noon Central Time. And lastly, I did want to share with you, yesterday we had a great day with our preborn campaign. Boy, you guys did a phenomenal job. So we're almost up to 22 ultrasound machines underwritten now. We're well on our way to that 50 ultrasound machine goal. Let's keep it moving here, folks. I had a headline I wanted to share with you here. This is really scary stuff, but it just undergirds even more the necessity to be in that fight for life on the front lines. There was an activist, this news came out yesterday. This activist, a pro-life activist, was sentenced to 4 years and 9 months in prison for leading an abortion clinic protest in Washington, D.C. back in 2020. She was convicted last year of 2 FACE Act violations for organizing a rescue at the clinic, basically trying to save babies. The DOJ, the Biden-led DOJ, had asked for a 6.5-year sentence against this woman. The attorneys representing her asked for a 1-year sentence, saying she intended to lead a peaceful event that involved an attempt to rescue preborn children from imminent death at the hands of an abortionist who this person believed performed illegal late-term procedures. This abortionist actually said he would not help a baby who survives late-term abortion procedure. Here's what's happening, folks. The DOJ is locking up someone who's trying to save babies and letting someone walk free who actively says he would not help a baby if that baby was dying. That is absolutely ridiculous. And this is why we need organizations like Preborn. And Preborn cannot do what they do without the generous donors of financial issues. So great job to you all for what you have done so far. Let's continue this push. We're about halfway through the month of May. We're almost halfway to our goal, so we're right there. Let's get a big day today. Remember, every gift of $5,600, another ultrasound machine is underwritten. That machine is that life-saving tool And of course, at the end of all this, all the money that we raise, that gift will be given back to financial issues. So if you love financial issues, give to preborn. If you love preborn, give to preborn. If you love unborn children, give to preborn. If you want to glorify God with your money, give to preborn. Boy, what a great show it was today, folks. God willing, we will do it again tomorrow. Remember, all that you have belongs to the Lord. Let's be found good and faithful stewards with it. God bless you all. I appreciate you, and Lord willing, we'll do it again tomorrow. Have a great day.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.
You're listening to Financial Issues with Shanna.